Well, that was an absolutely fantastic way to finish up the week with crude oil. You see a simple parabolic SAR and a zone confirmed our entry, in addition to a couple other factors that I'll be talking about on this video. And this one trade could have been your entire week's worth of trading with a nice drop of over 174 pips or ticks if you're on the future side as well. So in today's training, I'm going to show you how to install the Parabolic SAR. I'm going to show you how to use the Parabolic SAR. And then at the end of the video, I'm going to walk you through my weekly crude oil analysis. So if you're ready for this video, you know what to do. Hit that like button and let's get started. Hey everyone, the Professor here, and welcome back to the Professor Trades channel, where I focus on giving you education so you are working smarter and not harder in your trading journey. So in case you don't know a little bit about me, I've been teaching college business courses for over 15 years, and I've been a full-time trader for the past 8 years, but always admit that my first 3 years I struggled as a trader. I lost more trades than I won because I wasn't disciplined. I had no mentor. I was not a part of a community. And so those are 3 important things that I think everyone needs in order to expedite their success. Now, saying that, there is no fast route in trading. It literally takes a good 3 to 4 years to truly begin to understand the markets and begin to understand structure. And again, a lot of people make the mistakes of joining, 10,000 Discord groups and 10,000 Telegram groups. And at the end of the day, if you're not investing in yourself and learning the craft, when some of those things go away, you are left with nothing in return. So my channel is dedicated to give you tools to build your success. And our trading community is built on expediting your success by surrounding you with like-minded people. So again, my goals for this video for you are going to be, number 1, I'm going to show you how to install the Parabolic SAR. And in case you do not know, the SAR, S-A-R, stands for stop and reverse. Secondly, I'm going to show you how to trade with the Parabolic SAR on a few different time frames. And then thirdly, I'm going to walk through the crude oil analysis so that you are better prepared starting with the Sunday market open on Sunday. And then we'll also talk about the potential gaps as well. Okay, so let's go ahead and get started with installing the Parabolic SAR. Okay, so what you want to do is you want to head over here to the indicators section on TradingView. You want to click on that. You want to head down to the search and you want to begin to type in the word parabolic. And as you can see here, I've already got it saved on my favorites. And then you want to go ahead and click on this one right here that says Parabolic SAR by itself. That will show up in the search field, and you want to click on it. You want to exit out of here, and then you will see that that particular indicator appears in the upper left-hand corner. Now, what you want to do is you want to go ahead and click on the Settings tab, and that Settings tab will first take you to the inputs. Now, what you want to do is you want to make sure that your settings are the same as mine. So you want to have a start of 0.05, an increment of 0.05, and a value of 0.5. When you head over to the style, this you can actually change to your personal liking. Because I use the dark background, I like the lime green color, and then I like to use the circles, but you're more than welcome to play around with any of these settings and change it to your personal preference. So for me, I'm going to leave it as is. And I think something that's very important that many people miss is you want to save it as your default. By doing that, if you lose the indicator and you reinstall it, it comes back exactly the way that you saved it. So click on Save as Default and click OK. Now you've got your Parabolic SAR inside of your chart. So I'm going to give you a couple of examples. And of course, I always like the higher time frames from 4 hours and above, because I think this is where you get your max value. And this is where you can really begin to strategize a couple of different options that you have here with the parabolic SAR. Okay, so we're going to take a couple of different points just so you can see how you can combine this in a couple of different ways. So let's start right here in this section right here. Okay, and the way that the parabolic SAR works is when there is a structure point that has been broken, in this case to the downside, the first parabolic SAR appears on top. That means that price is falling. Vice versa, when there's a SAR at the bottom, that means that there has been a structure point broken to the top side and price has begun to climb up. So these are basically created when structure points are broken. Now, that being said, okay, what you want to do is you want to combine the SAR with a simple support and resistance and maybe even Fibonacci if you like that. So for example, I told you we were going to take this area right here. So what you should be doing is looking at the structure by looking at previous support and resistance. So if we had this marked up as a previous area, okay, of resistance, and let me make that white, okay, then we're looking for price to come back up to this particular area. Okay, so you can see right here that we had both a support level at the bottom and then this resistance level at the top. And we'll just go ahead and mark that there. Okay, so when we're looking for this first area right in here, okay, we can see here that price began to come up towards an area of resistance. Now, if we add one more little tweak to it, and again, this might be a little bit advanced for some of you, you can just trade with the SAR by itself. But what I want to give you some value while we're here is by adding a Fibonacci level, right, you can now confirm a couple of things. Number one is that price reached near that 88.6. And again, for those of you that work with me in my community and in my group, we always talk about that is the maximum that price will usually go unless it's going to break the trend, which means that price would then close above the 100%. And if that's the case, then obviously you would close your short in this position. But this is why the parabolic SAR is so powerful, because even if you don't have support and resistance, what you want to do is you want to identify that first parabolic SAR. Okay, so basically what this means is that the moment that this candle right here broke this structure, the parabolic SAR was created. Okay, and the way that the parabolic SAR would work would be that you would grab your first parabolic SAR, and that is where your initial stop loss begins. Your entry would be the first SAR candle, so we'll mark it about halfway down as your entry. And then on a 4-hour time frame, what you are looking to do is you are looking to grab at least 40 pips, okay, on a 4-hour time frame. So if we're looking for 40 pips, we can see that that 40 pips really already happened on that first candle right there. That's 81 pips right there, okay? Now, of course, and I'm going to make this blue. So on my charts, red is that initial stop loss and then entry. Now, you may be saying, wow, that's a huge stop loss to begin on a 4-hour SAR. But what you have to recognize is that as price goes 20 pips into profit, you should be trailing your trade with you. So if you just take a look between entry and where price ended up going with this wick, right, that would have been 141 pips. Now, you are not going to leave a trade open with 141 pips without protecting that trade. Okay, so that's one quick little example, and we do a lot of this stuff inside of our group. Let's take now the flip side to the top side. Okay, so we had identified that we had a floor at this particular level. We can clearly see here that the first SAR was created right here. So our stop loss would be the first SAR. And again, we'll keep it consistent, and we're going to make that red. Okay, now what I tell a lot of the folks in our trading group is you have two ways to trade this. If you just want to go in on the initial SAR, then your entry would have been here. And let's mark this as green. Okay. Now, what happens is that in this particular case, the price retraced back, but never came back down to your stop loss. So again, this is a trade that if you're using good risk management, you can do one of two things. You can keep your first position, and when you see a retracement, if you're not over trading, again, you can use a Fibonacci level, because what happened here was that price ended up coming right back down to that 88.6 area again. You could have entered a second position here, and now you would have begun to ride 2 positions up. This then eventually went into profit. And again, we talked about grabbing at least 40 pips, and there is 40 pips right there, which means, and I'll make that blue for profit, which means this went a lot further than 40 pips. This actually gave you from initial entry up to a maximum of about 164 points. So again, this is a case where you would be taking your stop loss and you would be moving it into profit as you are trailing this particular trade. So we have one example to the downside that netted over 100 pips, and we just gave you an example to the downside that also netted you more than 100 pips. So this is a very easy way, if you are a newer trader, to have one indicator on your chart, follow the examples that I just gave you, really on any time frame. Now, I would caution you that you're going to see more volatility as you drop down in time frames. So for example, I always have the folks in my group never look at anything lower than the 1 hour time frame. Okay. But even on the 1 hour time frame, you are going to find tremendous opportunities. And we'll just again take these 2 examples right here on the 1 hour time frame. So let's focus in on this first parabolic SAR so I can walk you through it. Again, that becomes your stop loss on the initial SAR that's created. The SAR was created on this red candle right here because this structure was broken. So that also becomes your entry. We'll make that green to keep consistent. And on the 1 hour, you are actually now looking for less pips because you are on the 1 hour time frame. So that being the case, what you want to do is you want to look for 20 pips or more. So if we look for 20 pips, that 20 pips happened right there very quickly. Okay, very quickly. So I'm going to put a blue line to show profit level. But again, this traveled all the way down to this point, 152 pips. So again, you would be taking your stop loss if you're going to trail it, and you would be moving it down with you. Now, one of the strategies that we talk about all the time in the group is to enter 2 trades. So if your risk is 2% a trade, you enter 2 entries, 1 entry, 1%, another entry, another 1%. So your risk is the same. But what you do is you close 1 entry at 20 pips and you let the other entry run as far as it can, as long as you are moving that stop loss and trailing your trade with you. Okay, now let's take a look at what happened when price came down to this point here. Again, we have our first parabolic SAR here. Let me grab a marker. Let me move the chart up a little bit. Okay, that was created on this green candle right there because this green candle ended up breaking this structure point. That is why that first SAR was created. So again, your entry becomes that particular place right there. Let's keep it consistent with green. We are looking for 20 pips or more. That happens very fast. Okay, that happened right there, as a matter of fact. Okay, and we're going to make that blue again as our profit line. But again, and let me put the original stop loss that I forgot to do, which would have been right here. Now, again, what happens here? Price continues to move to the top side, right? As long as there's green dots to the bottom, we continue to move with it. But let's just stop here so that we don't get a little carried away. Again, another opportunity for 150 pips. Again, What are we doing? We're closing position number 1 to secure 20. And as price moves, we should be trailing our stop loss into profit at least every 20 to 30 pips. You never want to let a winner turn into a loser. So I hope that very short explanation gave you a little bit more confidence and began to really explain a little bit more about how to use the Parabolic SAR when trading crude oil. Now, if you want me to do a full defined video going from A to Z, covering every time frame from the 3-minute all the way to the daily, what I want you to do is go down to the comments below and type in SAR for SAR. And if I get enough people interested, I would create an entire tutorial video dedicated to crude oil and showing you how to use the Parabolic SAR starting at the 3-minute time frame and walking it up all the way to the daily time frame. Okay, if you got some value on this section of the video, you know what you can do. Smash that like button. Hey, if you're brand new here, welcome to the Professor Trades channel. You definitely want to hit the subscribe button below. Hit that notifications bell so you do not miss out on any of our training videos. Now, before we get into the analysis, if you have not yet checked out my community, I highly encourage you to do that. When you land here, we're going to give you a nice welcome area for you to get started. And over here, you're going to be able to see the different sections that will be available to you. Here is the trade alerts section. You're getting content, you're getting trades, you're getting stocks, you're getting everything that you need to be successful in a very supportive community. And again, we do 2 live sessions per day as well. You have an entire chat zone with over 180 different traders from all over the world trading futures, trading Forex. And again, people are sharing their charts. This is where growth happens much, much faster when you are in a trading community of like-minded people who just care about your well-being and your interest. We also have an entire video section here. As videos are posted, you're going to have access to videos and tutorials that are exclusive to members only, and they're being dropped right here in the video section. Now, we talked about live events. So for example, these are some of the live events that are coming up. Every Sunday, we do a live gap analysis. And then every morning, we do a live US session analysis. And then every evening, we do a daily review and London trader sessions. And then we also have member weekly Q&A sessions as well. In addition, every Saturday, I'm dropping a little extra knowledge to our members by giving them an article that they can read that is going to enhance their trading journey as well. So you're getting a little bit of everything for the price tag of less than $1 a day. Let me repeat that, less than $1 a day. And I am so confident in my skill set and our community that you are guaranteed to make back your membership, because even if you're only trading $1 a point, we are giving you over 20 pips per day. Multiply that times about 20 trading days in a month. You see where I'm going. So I hope you join the community. We love to see you there. We want more great people joining us who can add value, continue to build the community, because our goal is to change lives 20 pips at a time. Okay, as promised, let's get into the crude oil analysis to begin the week. And as I normally like to do, I like to begin on the monthly time frame. So here we are. As you can see, we are in a pretty deep bearish month so far with crude oil. So the first thing I'd like to do is take a look at where we are Fibonacci wise when it comes to crude oil. So we're going to actually start from this low to this high. And you can see here that we have come pretty close to the 61, and we're currently sitting right at the 50%. And even if we started from this low right here, then it doesn't really change it too much. Again, we've kind of around that 61 to 50% area. And again, we're just looking at the monthly just so we can put it in perspective. Okay. Now, if we do get rid of that Fibonacci level, let's get rid of that. And we add a trend line right here, right? We begin to see that we are nearing that trend line as price continues to drop on a monthly time frame. Okay, so just love to look at the monthly, see where it's at, give us some perspective that, as you can tell, we are still bearish as we are about, almost halfway into May. So, right now on the monthly time frame, price is dropping. Now, if we head over to the weekly, here is where things begin to get a little bit more interesting because, again, same trend line, we just make a little adaptation here to it, and we begin to see that we are kind of riding this area. Okay, so now we have a little bit more confirmation that on this trend line on the weekly, we've touched once, two, pretty close, 3, and 4. Okay, so will this trend line hold up right here on the weekly? Okay, we ended last week in a very undecided territory, right? A very undecided territory. We went up, we came down, and we closed just about where we started from the previous week, which closed right here. So we ended up basically coming back to the starting point when it comes to the weekly candle. So I'm going to kind of leave that trend line there for now. Okay. And what we're going to do is we are going to begin to now evaluate this from a daily standpoint. So now that we look at the daily, right, we can begin to see, again, here we are approaching that trend line on a daily time frame. So this is where we begin to kind of really do our analysis. So we're going to mark up the tops. Let's change the white. We're going to mark the bottom, which right now is here. So what I like to do is begin to trap price. Okay. Now we're going to begin to mark up our support and resistance, our SNRs at the different time frames. And we begin to see here, and we're going to look at one more down here to the bottom side. I'm sorry, the top side. Okay. And I like to be extra conservative when marking these because I don't want no surprises on possible reversals. Okay. So this is kind of where we're at. Okay. This is kind of where we're at when we are looking at this daily time frame. We can see we had, one wave down up, second wave down, one wave up. Are we going to create that third wave down? This trend line may have a lot to do with it right here. Always remember that these zones are not an actual number, but rather they are an area. So we would look at this area as something like this, okay, where price has the potential to reject from. So we're coming into the crossroads of this strong resistance line at both the weekly and the daily, and we're also coming to a previous level of support. So we have to begin to look at a possible bounce from this area to take possibly crude oil back up another level. We shall see. Again, one of the things that we talk about all the time in our trading community is that our biases, our trading psychology, what we read in the news might tell us we think it's going to go up or we think it's going to go down. And that's super hard to remove from our brains psychology-wise, but we continue to reinforce the fact to everyone in the community, let's focus on trading what we see versus what we think, because that, what I believe is going to happen, will get you in trouble because your bias will be swayed based on one opinion or another. So stick to the movements of the candles because the candles will not lie in which direction they choose to move in. So now that we've kind of defined our playing field here, this is going to be a very, very key area to look at, because if we close below this basically 77 level down here towards the upper 76s, then we're going to expect price to drop down to our next level, which could be near that $74.50 to $75 mark. Okay. If we reject this area, then we're expecting price to at least go right back up to 80 or so. So this is going to be very, very important to look at. Let's take a look at our 8-hour time frame. Again, there's our trend line. There is our level of previous support and resistance. And again, we can actually move this down just a little bit more, okay, just to catch more of these wicks that are hitting. But again, this is a pretty strong area. And again, this is an area that we have to begin to look at now as we focus in on current data. So let's grab a Fibonacci retracement from where price went up to where price went down. And lo and behold, we are right at the 61.8 area. Those of you in my group, we love trying to catch that reversal right here, right before or near that 88.6 area. So that is where we are going to be looking early in the week, obviously depending on what happens with gaps on Sunday evening as well. So we kind of have price right now trapped, again, between this 77 area and this 80.50 area right in here. Here's our perspective from a 4-hour candle right here. Again, everything begins to align from where we are right now. And again, just a much better view. And if you stick around a few more minutes, I'm going to be giving you some gap information. Now, when I look at this candle right here, right, we've come to take about 80% of the liquidity here, but I still see some liquidity right here. And this was our last low of the week. So this is why when we begin to see that in the group, if price does push down, then what we normally like to do is let price create obviously the new low for the week. And again, if we break the trend line, then we can expect the next bounce at the 127. Okay, so this is again why being in a trading group that knows what they're doing, that focuses in really, if you're a crude oil trader, then you're going to come to the right spot. This is mostly what we do. Yes, we do indices, we do gold, we do some Forex pairs for some that want to trade Forex as well. But our bread and butter is crude oil. And when you can master and focus in on one or two pairs, then you understand how price moves. So once candles begin to move in this direction, if we see big pressure coming down, we do not get into an 88.6 entry. We wait for this low to be broken, which will create then the new low for the week. And then we're sitting at the 127. Okay. Because what may happen there is you may get a bounce off the 127 with a wick, and then price takes off to the upside. So this is why, again, we are constantly in our charts and our analysis, we are looking for this as we are trading together in our trading community. So this is a possibility if price tends to come down towards the trend line because of it. Okay. So we shall wait and see if that happens. In the meantime, let's give you the gap information as we drop into our 1 hour time frame. So price closed right here. So we're going to label this as the gap. And that is going to go right here. And again, a quick reminder for those of you who've never traded the gap is simply the difference in price between price opens and price closes. So if we gap up to the top side, and we'll change that to green, right? This price open to where price closed is considered the gap, okay? And if price gaps to the bottom, we'll make this red. Then again, the difference is where price opened to where price closed, that is considered the gap. Now, as a reminder, gaps lately do not close within minutes as they used to back in the past. So understand that if you're going to trade the gap, it should be a very small position size, whether you're on Forex or you're on futures, because the gaps lately have been staying open for 5, 10 hours, 12 hours, 24 hours, or closing the next trading session. So again, this could be open for a bit and you don't want to jeopardize your margin. So again, this is like extra bonus, and it has to meet certain parameters for us in our community to at least trade the gap. And I always tell our members, we are looking for 50 points or more if we are going to get into our first gap position. We have an entire strategy on how to do that, breaking down a normal lot size or CL size in futures into 1/4 in case it decides to run away for a few hours or even for 24 hours. So as we are looking at the chart here, right, usually what's going to happen is that price will open and then run away for a while, right? So this is what we want to begin to enter our first position once it's met 50 points or more to the upside if we gap up on crude oil. Vice versa, if the gap goes down, usually it runs away for a while. Once it's hit 50 points or more, we are entering that first position based on our gap trading strategy. And then we're looking for multiple entries depending on how far that trade goes. Of course, if you don't feel comfortable trading gaps, then do not trade gaps, because gaps can, again, could be open for a while, but they're intended to be traded at a much smaller percentage of risk than you normally would because of the possibility of the open time frame. But that being said, gaps have been very profitable to us if you do it right, because you have the opportunity in some cases to grab 1 or 2 entries and then ride those until the gaps are closed. Okay, so I hope you got some value on this video. We covered how to install the Parabolic SAR. We gave you some examples on how to use the Parabolic SAR with crude oil. And then we gave you the initial crude oil analysis for this week. And so this is what we do. I do a Sunday video on YouTube to impact our YouTube community and give newer traders, experienced traders, some massive value. But the real value is inside of our trading community, because we're doing this every day, twice a day, with the knowledge of over 180 folks dropping in charts and really trading together as a community. So I hope to see you there. Okay, thanks for watching. This is Mother's Day weekend. So to all the fantastic moms out there, happy Mother's Day to you. Celebrate your moms, whether both past or present, because they make a difference in our lives. And if you are a female and you see this video and you are a mother, happy Mother's Day to you as well. Thanks for watching, and I'll see you on the next video.